Good afternoon. Welcome to Chicago, Future of Finance. I'm Oliver Renick. It's a pretty full room down here at Cboe in Chicago as we're making all-time highs in the S&P 500 index. Maybe just by a little bit, but baby, does it count? Because there was a lot of hand-wringing and geopolitical expertise about us fraying our relationship with Europe down to an unsustainable nub of an alliance over Greenland. A lot of panic over the last 10 days. I said it looked to me like a pretty clear buy the dip opportunity. Did you really think Greenland was going to break the SMH, the semiconductors, the AI trade? Look at the chart. It's been making consistently higher highs throughout all of it. And this is just the easiest market right now because you've got a very clear leader, you've got very clear growth, you've got very clear disruption, profit, earnings being driven by the key companies that are changing the world, not just the US, everywhere else too. China's got competition on the AI front, but the stuff here in the US is pretty amazing. Last night I took a document, plugged into a couple PowerPoint generators, and voila, my entire college career, maybe not that much, but a good bit of the legwork has been relieved from the process of production, and so productivity goes up. By the way, valuations are not expensive when you normalize by growth. So the chart of the S&P 500 looks pretty good right now. Even though the futures haven't quite punched through, the index has. You can see 69.88 for the intraday high. Looks pretty good. Also, VIX down from the intraday high right now to flat 16. Tells you things are pretty calm. Now, could we get some more chop along the way if things get too calm? Sure. We'll talk about some of those volatility dynamics as always with Brent Kochuba examining the flows with the team at SpotGamma. Here's the look at the futures. You can see we're just a tad below there, the high on the futures side. So do you want to see the futures punch through? Sure, definitely. But I think seeing the index level make new highs is good enough for me to take the yellow light that I had on stocks for the past 10 days and flip it back to a green on my risk radar. Bitcoin, really not doing a whole lot right now. MicroStrategy is down on the day, but BTC holding on pretty solid for the ride. Nothing really there that makes me want to flip the light green or red for Bitcoin as we're just meandering around in the high 80,000 range, just below 90. So that chart to me still doesn't really inspire very much. So we'll keep the yellow light for BTC. You can see we're kind of holding on to the low end of the range. This is where we've been for Bitcoin for a while. Definitely on the low end of that range. If Bitcoin breaks through the bottom of that, that's not good news for the coiners by any means, of course. Last thing I would point out from my perspective on the macro take is that the dollar is still getting beat up, and I don't love to see that. That cuts against a little bit of my narrative overall about the US leadership. But when you have the dollar down and bonds fairly range bound, which they are right now, that's not the most concerning. What would be more concerning is if we were getting yields spiking. Obviously, bonds have softened up a good bit, and the 10-year yield, as I mentioned last week, might be likely to come and test 4.2, but I don't think that we should expect it to move too far below that. I don't really think bonds are going to drive the action for the overall S&P 500 until you get something a lot more dramatic, but the dollar certainly tells us that I think we want to be aware of potential geopolitical-driven short-term volatility. The dollar needs to hold 96. As you can see, I've had this line on there for a while, actually. It's interesting that the dollar came down and touched it right on the nose there. And so I want that to hold, or else otherwise the dollar on my risk radar will most certainly go red. But right now it's going to hold yellow for the dollar, it's green for gold, and it of course is red for bonds as we broke through that 4.2%. Could that change if bonds firm up? Sure. Let's talk some flows and let's talk some options data with Mr. Brent Kochuba joining me from SpotGamma. Brent, how are you, sir? Good to see you.
I'm doing great, Oliver. Good to see you. Happy Tuesday.
Yeah.
Snowpocalypse over here still, trying to dig out.
Yeah, you said you only had one pipe that disrupted, but I said that's always a good opportunity to demonstrate your value as the man of the house.
That's true. Give me something to move or something to fix, and I feel like a man again.
Yeah, exactly. Does the market need fixing, Brent? How is the vol regime as the S&P 500 on an index level peaks its head above to all-time records on an intraday basis?
I think a lot of people keep labeling me a contrarian, Oliver, because into Christmas we were talking about OPEXmas and a market rally there when the market was at lows, and then about 2 weeks ago we were starting to talk about the fact that correlation metric we watched was really flagging risk. Then we had that Greenland kind of volatility spasm. We shook that off. Now we're at all-time highs, as you mentioned, the S&P, and the vols look like just not great again. And I say that today we had a $20 straddle in the S&P. That's about 30 bips of movement. That's as low as I've ever seen. I can't recall a day. It may have happened a couple years ago or something like that. I can't recall a 0 DTE implied vol of a volatility that low.
So that's like complacency, maybe.
Extreme complacency, and we're seeing huge 0 DTE flows today. $7 billion of delta swinging back and forth. And what happens in these environments is there's no big news out there. Market's near all-time highs, and the 0 DT people just come out and dominate the market on a day like today. And the reason that makes me a little nervous is because I don't think that we should imply or infer rather anything from the price action today, given that FOMC is tomorrow. Now, on that point, FOMC for tomorrow, the straddle is only trading for about $40. Very, very cheap in terms of the straddle or volatility expectations into tomorrow. And I understand that there's no rate change expected tomorrow. I don't know if that Powell criminal investigation thing comes into anything. We were just talking about that last week. But also related to this, that core 1M metric that we watch very closely, that's now in the 7s, so that's kind of at this level where we get concerned about risk. But Oliver, check out that term structure there, and you'll see the high points of that term structure on your screen are actually for Thursday and Friday. And so we have jobless claims coming up, we have PCE coming up, and we have
end of this
the
month.
Other inflation data.
PPI, we got PPI on the 30th,
PPI,
we got CPI 29th. Hey, by the way, I just love SpotGamma because you guys really blend in the economic data as well. This is like Econo Day plus volatility and term structure. You get a lot of bang for your buck. So I'm looking at the dates right now here for the economics. And to your point, yeah, the range of volatility here seems like it expands a bit.
It does expand a bit, and so people don't seem worried about FOMC tomorrow at all. Plus, big earnings coming out, right? We have Apple, Microsoft, Tesla. We have SanDisk, LRCX is another one coming out, those memory chip names, which there's so much vol tied to. So we're going to get a ton of information here over the next 2 days, both on the macro front and then on the major mega cap earnings front, and then obviously with FOMC. And things are priced for absolute perfection. Maybe we get perfection. Maybe earnings blows everything out, and then we could see the VIX go from like say 16 and suddenly kind of plunge down into like the 13s. Because if you're going to see the glass half full, glass half empty, or devil's advocate, you could say, look, Brent, your risk metrics are flagging because the short-term implied vols are very low. That correlation metric is at extreme lows, but VIX is showing us, which is more 1 month volatility based, that there is a bit of a vol premium. And so if earnings are good, then maybe we could track and finally start to take out, that 7,000 level in the S&P. The Qs look like they're ready to break out, et cetera. So it's a challenging spot. And the way that I'm navigating this is I'm compelled to buy some put protection here. I'm looking at 1 or 2 month S&P put or VIX call spread protection based on the fact that these vols are too low. I think we could have another Greenland-like spasm, right, where suddenly we lose 2%, VIX goes to 20, and then 2-3 days later it's just kind of all washed away again. That's the kind of setup that this seems like to me. But again, there's a lot of binary events coming up here in the next couple of days, and so we can sort of afford to wait to see the risk shot across the bow, I think, before we step in a little bit. And then, Oliver, I just want to point out one last thing. TLT, so VXTLT, that's the VIX on the TLT, which is the long government bond. That's at like a 5-year low, I think it is, or a 3-year low. So the vol in the bond space is extremely low when you look at those ETFs, right? So those are also priced for perfection. Again, I'm not a macro guy, so I can't say that everyone's wrong about this FOMC being kind of meaningless. It's just that those vols are extremely low and, again, priced for perfection. So that is sort of the risk that we watch.
That one I definitely like, Brent. I'll say, because I think you've got a lot of good things in there that I want to just kind of recap real quick. But the first I'll start with is that for bonds, the trend here, I'm pulling up the TLT price action chart, and it is indistinguishably, clearly a downtrend in price. I mean, lower highs, lower lows. You can't miss this channel. And it's actually kind of right now at the higher end of price, lower end of yields at 4.2%. So I would love to kind of hedge the whole market in general by being short bonds. Now, to your point, and that's why they're red on my risk writer, but to your point with the correlations, I'm going to bring up Core 1M again. there could be spasms that make it worth also holding some equity protection. But I think if you're going to do that, you've got to have some kind of core long position, whether it's in just equity kind of fixed there, your mags, whatever it may be, your SMH, you know. But I get also the point that maybe the trajectory could be, you know, with a few little spasms along the way.
Yeah, the trend overall could still be high. And why should I think that the trend, we were talking about a month-long trend or 6-month-long trend, is clearly, you know, lower left to upper right. It's the rate of change that becomes an issue here, right? And that's where we end up with these situations, and that could lead to single stocks really spasming. And again, as not a macro guy, I just point back to that chart of the dollar that you had there. The dollar's been just cascading. And if the dollar pops, then suddenly a lot of these trades start to kind of unwind, right? You see probably gold and silver. You see gold and silver probably reverse pretty hard. You see the bond probably move off of that. You see probably equities retrace some off of that, right? So, you know, that rate of change is another one where you just go, all right, all these stars are aligning for things to just be very like one way at the moment. And so, you know, that has me being a little bit cautious, right? Because of some of this stuff just seems over its skis. Oliver, on this point, SLV yesterday, I mean, holy cow, 6.3 million contracts traded yesterday. It almost traded more than spiders, which is just sort of unheard of.
Wow.
It you know, 2 to 3 times bigger than its largest options volume day ever. Massive price sort of dislocation there. It was up 15% intraday until about 1 o'clock yesterday, and then it sold off from there. It's a little bit stable right now, but vol is starting to really kind of come in there. And so, you know, that when you see that much volume and that much intraday reversal, you know, the big guys came out yesterday and in size, just the deltas and the notional values that were trading were just unbelievable. And so it felt like that may have been a real turning point there, that kind of 110, 115 price area where some bigger guys came out in the 0DT space and traded a lot. Those SLV options have 0DTs on them. So that was really remarkable volume. But, you know, again, I think you see that dollar pop, and that's maybe the tailwind that suddenly brings some retracement, some removals in some of the overbought conditions in some of this stuff. And then last, I'll just bring up the memory names are by far the leaders here when you look at the SanDisk, LRCX.
Oh, yeah.
Microsoft just announced a deal with a Korean company. I'm not going to pretend to mark that name. That stock was up 9% overnight. It's not listed in the U.S. So, you know, that flavor of trade is still leading. LRCX reports tonight. SanDisk reports tomorrow. You know, these things are also priced for perfection, right? So you need a grand slam in earnings for these things to fulfill their volatility prophecy, right? You have forward implied vols, implied vols are projecting big forward returns here, and so any kind of vol contraction would also just lead to a cooling, I think, in the upside in these names. So, you know, that's what the risk is for bulls here, is simply just the trade is like people have been front running this bullish trade, and some contraction or just some consolidation, I think, would be very healthy, a la kind of what we had with the Greenland situation a couple of weeks ago.
Fair point. And, you know, the rate of change straight up to maybe being more of a churn. And
yeah,
I
that's
think
up, what, 50%, I think that is, in January. You know, 100%, 250 to 500 for SanDisk right there.
Oh, for SanDisk. Yeah, for sure. I mean, it's just incredible. I do feel like we've done a pretty darn good job here with our contributors, our heavy hitters on our show that have been long the memory stuff, that have been, for the most part, I think probably 3 out of 4 have been long silver as well.
Amazing trade, yeah.
Yeah, Pete Najarian on deck, who's going to give us a little recap on what he calls the Burl Ives trade for silver. I wanted to that note, just put some options context on it real quick by going back to SpotGamma for a second, because, you know, to your point, is just you don't often see this type of situation. SLV up here in the top left, I'm highlighting 2 million options contracts. You know, just extraordinary. Look at gold over here in terms of the largest daily trades, GLD, with the memory stocks right alongside ASML, S&DK. You know, it's pretty clear where the action is. But I'm with you, Brent, that a surprise comeback in the dollar, if it doesn't disrupt stocks, then it certainly, I think, still has the potential to disrupt gold and silver a bit.
Yeah, and the vols are getting so crazy, you know, it's hard to say buy a call option in silver or gold and make money. Like, you need these 5 to 10% daily moves to keep coming in order for that to be profitable, right? And so, you know, again, it's a rate of change issue. And yesterday, you know, you see these moments where there's just such unbelievable volume. I mean, it's hard to articulate how big 6 million contracts is.
Monsters.
That silver, this little commodity ETF, almost trades more than the S&P 500 is just like a shocking statement, and it's big volume again today at 2 million contracts. So I think today's 2 million would be the second or third all-time high, in terms of volume there. So, these trades are very crowded. Everyone knows what these trades are, and it's hard to sit here as in a contrarian stance again, saying, this stuff is all looking a little bit rich. Also knowing that if you look at like a chart of the Qs, it looks like it's about to bust out. And if you get good Mag 7 earnings, here, and Powell just kind of doesn't say anything too exciting or provoking, then why should we think that 7,000 in the S&P and fresh all-time highs in the Qs is kind of on deck? So it's it's sort of a binary event here, but I do think it's worth getting that put protection or just being aware that call implied vols are quite rich and single stock vols are quite cheap. Index vols are quite cheap.
Index vols are quite cheap, right? So the case for maybe hedging against single stock positions, they're long. And then also, I think, to the point, hedge with the TLT put, because it looks like the most clear kind of downtrend and was sort of involved in a little bit of that surprise. But otherwise, if you're in the metals, maybe coast clear until the dollar starts to rip back. Great stuff. Thanks, Brent, as always, sir. Excellent look there inside SpotGamma. Brent Kochuba joining us for the look at the flows. Let's go straight into what's been called the Burl Ives trade by Mr. Pete Najarian joining me on the horn. All right, Pete, good to see you, sir. How you doing?
It's great to see you, Oliver. I'm telling you, man, silver and gold, right? I mean, we've been talking about it for I don't know how many weeks, but, the reality is that it's been hitting. It continues to hit. Yes, there's a pullback today in silver. I get it. But I think the reality is that when you look at this trade and you look at the demands for silver that you've got out there, it's absolutely amazing. And I don't know what level it will get to, but I can tell you that we continue to see incredible amounts of unusual options in there. And I'm not just talking volumes. And I heard you guys talking about some of the volumes that are trading in some of these various areas, specifically silver. I love seeing those volumes too, Oliver, but I want to know, are they buying or selling, right? I mean, that's what really matters to me.
Which is always tricky.
Yeah, it's very tricky, but we think we've got some algorithms that help us out a lot there. And I can tell you that, when I look at the what's going on in both GLD and silver, it's been incredible. Now, silver obviously has all kinds of different uses that gold does not. But, when you look at what's going on in the GLD, for instance, I mean, some of the size of these trades is absolutely extraordinary. And I know I've said this before to you. I know that I have. So I'm not trying to repeat what I've said.
No, you've been on it. Last time we spoke, I mean, this was when it was like ripping, where a lot of people would look at that chart and they'd go, all right, now's the time to fade it. It's too hot. Yeah. You said follow the flows. You said stay long. Credit to Phil Strebel, who said triple digits too. I mean, our coverage has been pretty spot on here. And by the way, I personally have kind of abstained from trying to pick a direction because I feel like it's just manic, the silver thing, but you nailed it.
Well, the silver and the gold, the GLD thing, I just took a couple of notes down from just yesterday and today. So just this week, right? 34,000 Septembers, 11,000 April, 70,000 September 590s, 37,000 of the Marches, another 12,000 of the Septembers, another 6,000 of the Februaries. These are pretty good sized trades that are going out there, and that's in the GLD. And in the SLV, not all that different. We had 12,000 Marches, 9,000 Mays, 5,000 Decembers, another 6,000 of these Marches. And it just keeps coming. The flows keep coming into those names. And so, I'm one of those guys that I don't mind. At some point, you keep rolling, right? You roll to the next one, and you roll to the next trade. You're going up and out. In other words, you're going higher on the strike, and you're going out in time as you move along with these. At some point, Oliver, they're going to be wrong. But at this point in time, I like the looks of that chart. And when I look at the chart of GLD or I look at the chart of SLV, does it feel a little lofty? Absolutely. But the more I stare at what's going on with silver specifically for a moment, I just look at all the various uses that we talk about all the time. And it's in data centers, and it's the powering of AI and the conductivity of what silver really is, and all these variables that make it that much more interesting, I think, than gold. Because Are we going to stop with solar? Probably not. I mean, these are very critical. There's medicine that's involved in these, phones that are involved with this whole thing. Obviously, the computers that you and I use, day in and day out, all of that is just packed into what silver really is. And I'll tell you what, these demands, we talk about demands of AI, and we talk about a lot of these various companies that just keep getting bigger and bigger and spending more and more money on this whole thing. Well, the more money that they're spending tells me that they're getting more different things that actually require silver to be a part of them. So because of that, I don't know when this slows down, but it hasn't slowed down yet. So it's been a pretty interesting run.
To the point of the tech connection, looking at Round Hill's chat ETF, which was range bound and popped today. MAGS, of course, the MAGS, which is on a multi-day run, again, firming back up. And, of course, SMH, king of the crop, putting in highs and has been for the better part of the last week. So the fact that this is connected to tech, I do believe there is part of that. However, Pete, I have to give also some, a hefty importance to the dollar here as well, because of course the kind of macro explanation that the gold bugs, Peter Schiff will give, and even some of the silver bulls will say this is all about a weaker dollar, and this is about a kind of macro shift. Now, I think it's split. I think it's a little bit of both. I think it's some tech demand. I think it's some dollar weakness. My question to you is, what do you think happens to silver and gold if dollar finds any degree of support? Is that a risk to this trade? Will the dollar give us the heads up to when the metals spree might be over?
I think that there would be, there definitely going to be a reaction to that. And I think that that's something that we have to all face. And as I said, at some point in time, this trade will stop being the great trade that it has been. And it's all about timing. Do I have the time zone of it? Absolutely not. I just keep on rolling along with it, and that's the discipline that I think that I learned standing on the trading floor that you're sitting on right now. Literally just standing there and having to be as disciplined as I possibly could to be because you have to want to still be a part of this thing as long as you can. And I think it's interesting to watch how this thing has been playing out. December, really going back to December, that move from early December to where it is now for silver has been absolutely just mind-boggling, quite honestly, just how much has gone into that. But again, even if we talk about the dollar and the influence of that, I think that we still have to recognize that there is a huge demand still. And yes, there's certain dollar amounts and everything else that we could go into, but I think that the reality is that if you're powering AI and you need that silver, that's something that, we talk about these needs all the time and the demands for different parts that they're going to have. I think that silver plays a huge part of this whole thing. And I think it's going to be very interesting to see how that plays out. Will it pull back? Probably. And it probably should, quite frankly. But the problem is, what is the timing of that pullback? And I don't think any of us have the foresight for that right now. So this is one of those where I'm just trying to do our very best to kind of ride along. And when we finally see some put buying, which we aren't seeing, but when we finally start to see some sort of a turn, then I think it's time to say, all right, there we go. This is the time. But for right now, we just see buying, call buying, looking for more upside all the time.
I might try and get a little bit fancy here, a little bit exploitative, Pete, and just looking at my chart for the dollar, say I think it's going to be tough to break down through this support for the dollar immediately, given how rough the last few days are. I could express that through a long dollar trade, or I think I might want to do it through a short gold or a silver trade, but I very well may get my face ripped off for that. Speaking of getting faces ripped off, it's time for the gamble. I got some fun stuff for us today, Pete, because the Super Bowl is around the corner. And I got to say, I think your football read was pretty solid overall, I do think that your general idea of who was going to be out in front is pretty accurate here. I'm going to pull up some of the Kalshi bets for the Super Bowl. Seattle versus New England. New England back in it. Just amazing. These guys never lose, that franchise. Who you got, Pete?
You know what? I love what Seattle's accomplished, and you know both teams are so similar because they've got quarterbacks who really haven't been there before, right? I mean, you know, even though that Sam Darnold's been around for a little while, he hasn't been at this level as a starting quarterback, at least. And I don't know. New England just seems to have a certain magic going, right? And I think the fact that here's a player who's now the head coach, who's doing an outstanding job
That's
there.
pretty
He
cool.
came from a place where he really struggled in Tennessee, and I love what he's doing with the New England Patriots and how he's doing it. So I know that I think that the strength seems to be going towards Seattle, no doubt. But when I look at the New England defense and I look at what Drake May has been able to accomplish in the running game that they've got and the offensive line that they've drafted and signed some free agents, I don't know. I think New England looks really solid, and I like where it's showing up right now because I think New England has a great opportunity.
Okay, so and you also got the underdog there, according to Kalshi, New England at 33%. But I like your logic too, and you pretty much put it on our radar early on that Seattle was basically a lock for the Super Bowl. So good instinct there. You still got it. I got two others here. I got Best Picture, which is fun. I think that one's easy call, one battle after another. Paul Thomas Anderson at 67%, but Sinners right behind it. Hamnet at 5%. I just can't get over the fact that that's an N and not an L in Hamlet. It's killing me.
You know
But
what?
I think that's a lock for PTA at one battle after another.
Yeah, I think you're probably right. I mean, I look at this and, you know, this one I'm not feeling nearly as comfortable about or as confident about when I'm taking a look at this. But, you know, Hollywood does a lot of great things, a lot of cool things. And I think if you're looking for Best Picture, this makes a lot of sense. You know,
Yeah.
I don't know that it was a great year, however. I'll just throw that out at you because, you know, I'll ask you, when's the last time you were in a movie theater?
It was a little bit of an overrated year. I go a good bit. I'm definitely an exception to the rule as a big movie guy. But to your point, I haven't been in a good bit. I'd have to give that a thought. Maybe the last Mission Impossible, Tom Cruise, as I try to always show up for him. But yeah, a little bit overrated, I think, in some of the stuff. I got to go see Marty Supreme. Word on the street is that his style of speaking, people are saying, reminds me of me. I'll take it since he's kind of the man of the town right now. Last one, Pete. Not to go into the rabbit hole of conflict here, but Kalshi, who will be the first to leave the Trump cabinet? Kristi Noem's at 33%, and I know that you up in the Midwest, kind of at the heart of where there's some chaos right now. I thought I don't know, is this worth the trade? Do you think she's going to get booted for what's going on with Homeland Security?
You know, I didn't think so much about that being the case, but, you know, it's certainly a possibility. I think what's happening, and I'm right in the thick of it because I'm here in Minnesota, so I'm seeing all these different changes. Holman's come into town and booted out some of the folks or whatever, so they're swinging around. I don't think that Kristi's going to get fired, but does she kind of throw her hands in the air and say, look, I've had enough of this thing and maybe walk away? I think it's a possibility. I think it's a long shot, though. I really don't see any of those three walking away. And I think that if that were to happen, I think Kelsey's got it right. I think 33% going with the highest level, I think it would be Kristi Noem.
Okay. By the way, the last one in terms of the Kalshi bets is actually stock related. So we'll bring it back home here for the S&P 500 at the end of 2026. Right now, 7,600 to 7,800 looks like the leader with a 13% chance. That sounds pretty good to me, Pete. Why not? Don't fix it if it ain't broke.
I'm with you, and you know what? It's one of those years where I think as we get deeper and deeper into it, and another earnings season, and all the rest of it, I think that makes a lot of sense. And I love the fact that they're so bullish, and I think it makes sense that we would be up there towards those levels. 7,700, that seems like it's forever away, right? But I think the possibility of getting up there is getting greater and greater all the time, especially as the AI trade hasn't blown up. And you know what? Financials looks pretty daggone good. So I think that there's some backing that you could put behind this thing to say, you know what? 7,500 probably is realistic. 7,700 maybe a bit of a stretch, but not that crazy of a stretch either. So I like that 7,700.
Yeah, I'm with you. Seems very reasonable at this point, especially as we kind of move past some of the geopolitical tension, if you will, and stabilize here right back near at all-time highs for the S&P. Love the silver chat. Nice eyes on that. Been all over that trade. Fun going through the Kalshi bets. Mr. Pete Najarian, good stuff. Market Rebellion, appreciate you as always. Excellent work on the gamble. All right, short 2-minute innovator break. We'll be right back. Chris Brecher on deck. We're going to check in on some of the winter storm trades that might still have a little juice left to squeeze.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
All right, welcome back. We got stocks cruising here. S&P 500 at 69.83. So the day has been fairly calm, but also fairly strong. We dipped a little bit in the last 15 minutes or so, but overall, we're in pretty decent shape. You might not be in decent shape if you got blasted pretty much in like 2/3 of the United States last week from the epic winter storm. Chris Brecher from Trading Nest TV was coming up with ways to maybe try and trade that. Chris, welcome back. What's going on?
I got to tell you, by the way, you mentioned about, we'll squeeze some trades in here. I was actually looking at orange juice now. I didn't realize that orange juice has had a spike alongside natural gas.
Chart looks kind of good. Let me pull it up here for you real quick, Chris. I mean, I got to say,
sure.
Just from eyeballing it, and by the way, I always love to throw up an OJ, my namesake. Kind of looks like it's got a little ascending triangle here I'm going to draw on the chart.
Yeah, I mean, I'm not saying I'm in it because I'm not in it, but it's just interesting to see the correlation with that natural gas. I'm sure they probably look the same. Well, not the same because natural gas had a massive spike, but the trend once you saw this kind of development system come up, I mean, it's had a nice move for orange juice because it's been in the dumps for so long.
Well, cold streaks, I mean, I guess it depends on if Brazil gets some of what we got up here in the U.S. last week, getting blasted across the board with piles of snow and epic wind. I had to put tape on my window so that the outside wouldn't get inside in Chicago.
Oh, wow. It's, I mean, you've had where the high's been below zero. So
that's right.
Now, I don't know if you're a golfer, but there was
terrible one, but
Pardon me?
Terrible one, but sure.
There was a golf course in Chicago when I was there for all that time that every 10 degrees colder, you got a discount on your greens fees, and it went down to below zero.
That's great. I believe it. Well, no, not a lot of people out there, but I'm sure someone found it. There's bargain hunters in every realm.
Yeah, that's for sure. Actually, somebody took me to where the Daily play golf. I can't remember the name, on the south side. And you don't reject that. And it was 30 degrees. I was wearing the head covers on my hands.
Part of that, I think, cold spell, to your point, showed up in natty gas. I got this chart that went straight up vertical. This is obviously one of the most notoriously tough trades to handle in the market. But to your point, if there are disturbances in the commodity space like here in natty gas, maybe it'll show up in orange juice, maybe it'll show up in other places. Do you think this was storm related?
Yeah, oh yeah, no doubt about it. It's funny about natural gas though, because so many have lost in that in the long run. But same thing, weather patterns. If you went and saw the weather pattern, like I showed you that YouTube with that other person, you had time to buy it. I just didn't buy it because I'm so used to everybody getting not doing so hot on natural gas. But boy, did it work this time.
Yeah. What do you think at 650? It's kind of got an interesting candle situation where today's session is inside yesterday's, which was ultimately green and bullish, but had a pretty big pullback as well. Any read on the technicals there?
That's a good question. I'm going to it on like FinViz, and I'm actually looking at like a monthly chart to give me an idea. And when I'm looking at it, it sure seems like a lot of resistance in this area.
Okay.
So if I go to monthly and really zoom out, that 6 to 7 looks like just a really brutal area.
Okay. Yeah, I got the same.
Yeah,
I'm pulling up a monthly here for the 10-year chart, and it's basically right in the middle where it was in 22, which was berserk. That was like when people thought Europe was going to freeze over, right?
Yeah, and I mean, just like silver and gold, though, if I even think of playing to the downside, because this seems like it always goes down after a while, you've got to wait for that reversal candle, because there's usually more than enough chance to play it to the downside. But as you look in 2022, the first red reversal candle was just not enough. A lot of times in these parabolic moves, it's the second candlestick. So the one you saw in April of 22 was a fake out on the downside, just like you probably saw one in silver, let's say 2 weeks ago. So usually that big old red candle, it's not the first one that matters. Back here in 22, it was the second one.
Okay.
And that's usually the kibosh once that second red candlestick. And, you haven't seen it in silver or gold whatsoever.
Yeah, no, it's definitely a different chart, right? Because part of the question here, I think, is this winter storm specific, you kind of fade this singular pop, or is this just natural gas joining in the madness of other commodity moves, which of course has been the main, juicy trade this year. But gold and silver kind of in a separate category of commodities to a good extent, I think. But just generally, when you've got the dollar falling apart, who knows what commodity could rip, could moon. That kind of seems like what's going on.
Yeah, it sort of reminds me of when GameStop, when everybody got the stimulus checks and COVID and all the other speculative stocks went up. And maybe it doesn't make sense, but everybody jumped on whatever was the next hot thing. And it makes you wonder, just with commodities rotating. I mean, we were in palladium when gold first started going up. We got out too early, but a lot of people did. But at least we got the direction right. But you're right, you went from palladium to platinum to silver to gold. And now I'm wondering about the grains. I mean, if you look at wheat, it's finally looking better. A lot better than it did, at least on a daily chart.
Looking at wheat right now, which has been trying to stabilize, basically, a little Chicago commodities talk, always like. It's been kind of stuck for the better part of, 6-7 months?
Yeah, and I know people get annoyed at technical analysts, but you see it's a better buy at 550 than probably here because there's so much schmutz in that area.
Yeah, no, I get that, where you're kind of stuck in a no man's land almost at 520, whereas you look to maybe get long at the top of the range if it's breaking out at 550. Does the same apply then? Get short at 500 if it breaks down through the downside?
I don't know about that because of like what you said about the huge spike in other commodities. I just got to think it's going to bleed into this and corn and so on.
Okay, so you think the dollar is basically the baseline move that's kind of supporting the whole regime? People just want to nab up physical goods, physical trades?
Yeah, even if it doesn't make sense in like a wheat. Yeah. And but the other is what you were mentioning regarding the dollar. The last time we saw this madness with the dollar versus yen was in July of 2024. And what you'll see in there is when that happened, the Nikkei went down first, and then the ES followed. So when you saw that in it was July of not the dollar really, it was more the yen, but yeah, it was the dollar also in July of 2024. The Nikkei got hammered 2 weeks before the ES did.
When the yen spiked, yeah, right?
Yeah, exactly.
Yeah,
and so this time you might say, well, the markets are going to go down. Pardon me?
Yeah, just purple line Japanese yen on the chart we're looking at right now. So that big spike, eventually the dollar came off. I mean, the dollar came off pretty hard with that too, right? But then eventually stocks did as well.
Yeah, but a lot of people are saying, oh, the same thing's happening. You got to short the U.S. markets. You just can't short them until the Nikkei cares.
The other thing too is that ultimately it was a dip buying opportunity in 2024, right? I got it up right now in August. The yen move
there
wasn't
you go.
done yet,
When did buybacks start? They started in August.
Sure, yeah, there you go. Because the yen
when
move
most
is
of
still
the companies
going.
reported.
Yen had 3 months of upside still, or at least 2 months of upside into basically, September. So you got, at least 60 days basically where stocks were going back up. As when the yen peaked, you had this red candle on the S&P 500, and then we kept on cruising. So it's a stretch for me, to your point, to think that the yen or Greenland or any of this stuff is going to get in the way of our general AI-driven train.
Yeah, for now, definitely I see your point. There are only a couple of things right now. And one is if the administration discourages buybacks, which I think has fueled the market, like we mentioned, for for decades, that could be a negative later. And as opposed to what Pete was saying, I think the big deal is going to be stock markets hate uncertainty. Is if you get close to the midterms, it looks like a huge change in everything. I think you could see a big sell-off in the markets, but it's sort of like slasher movies. It's like from where and when. So you just don't know when the bad person's going to come out. So I think you have to see exactly what you're showing, a defined trend line break. So like you saw in February and March, and you'll have more than enough time to get short.
Yeah.
So for now, you could ride it to the upside.
Just not a lot of signs that, there's any trend breakage. Someone in the chat, Jason James, was asking about a yen intervention by the Fed. My general thought is that the Fed's going to be pretty handcuffed to do anything until you get the new guy in charge. I think that whole situation is basically siloed off as you got, Powell under investigation, and it's just I don't think necessarily that the powers that be should be concerned with what's going on in Japan too much. I think a lot of it is very much overrated in terms of its impact on the economy and markets, whereas innovation, growth, and the combination of value therein that exists in our big tech is still the number one story.
Yeah, and by the way, I know I don't have a lot of time, and if you want me to go over Generac, because
hit me. That's to close it up on the power trade, because I know you've kind of been thinking about nibbling in this as it comes back down on this support line, maybe.
Yeah, well, it's really neat. If you go to CNN, because I know you like looking at AI and a lot of correlated words, sort of like a Bloomberg terminal. So today, CNN talking about bomb cyclone off the Northeast coast coming up this week. The
bomb
second that hit, Generac went up 6 points.
Okay.
Today.
I missed that headline. Bomb cyclone. What exactly is that? Let's pull that up here.
Well, they're coming out with all these terms like atmospheric river and all that. Do you see the bomb cyclone thing?
Yeah, I see the bomb cyclone. Whew. That's scary stuff, man. I feel like, look, it kind of was a bomb cyclone the way it hit here. The freaking building was about to blow over, and snow was trying to creep in through the insulation in my windows. It kind of was a bomb cyclone.
Well,
and it wasn't even the worst here. It was worse than New York.
In Atlanta, here in Atlanta, I actually have blankets on the windows right now. So it's we don't have double windows and all that, so it's a little rough. So but getting back to it about Generac, the whole idea, and you and I had talked about it, about the buy on rumor, sell on news. So on Friday, we played it to go down to support, just like you showed on that line. So we played it to go down to support. Once it got to support, we got out. But then when I saw the bomb cyclone news, we got back in.
And so that support is what, like 160?
We played the 185, 175, 185, 170, 155 put fly on the way down for 30. It sold at like 510. We did it like 3 times. But then this morning, I did it the other way and bought it at 520, but the call one, betting on it going up and getting out at 6. So, I mean, that doesn't sound like a lot, but it's still, 15% on a $5 spread.
Sure. Okay, so you faded a little bit, and now you flip back long Generac through what, call butterfly?
Yeah, but now you might ask, why did you do a put fly in front? Why not just do a call fly way in the money? Because on the way down, you can always leg and buy like one of the middle strike puts back on the way down.
Okay. What's the core of the fly? What's kind of the midpoint of where you spending the most money? Where are you buying the most premium? What strike?
Pardon me? I didn't hear you.
For your long position in Generac, Chris, where's kind of the meat of the trade in terms of where you're spending the most premium? Because you're back now long, you're owning premium, looking for upside, right?
Yeah, well, we're already out. But the whole point was when it was 164 late yesterday, we were doing it the opposite way. So as it started going up and you saw that bomb cyclone, you could buy the middle strike back.
Okay, yeah, it did rip pretty quick. I see your point that kind of moving on headlines with some of these sharp candles. Nice, all right, I love it. The winter storm trade. Fun stuff, good stuff, Chris Brecher. Nice eyes on some specifics in the category there.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
Now, is in gold, which just ripped and maybe tore a few shorts' faces off there. Luckily, Mr. Scott Bauer still got his handsome face, joining us from the Colorado shot. Scotty, good to see you, sir. We got 10 minutes till the bell here. How you doing?
I am doing great. I wish there was more snow out here, but it'll get there.
Ironic, right? All the snow landed in different places this time. We got Chris tying up his windows in Atlanta.
Except not here. So yeah, pretty big rally there in gold, and overall, Oliver, this rally in the market overall, especially coming from some of the big tech stocks ahead of earnings, very surprising.
Just in the last couple minutes there, as S&P took a few candles higher, but then the minute just came back down. It seems like we might have a little bit more chop in stocks. I mean, the chop has bent upwards and to the right, but the action just unmistakably has still been in the metals. Scotty, what do you make of that trade-off?
Yeah, there's no question about it. It's probably at this point a little bit more than just a FOMO trade. Again, it's any little sell-off we've seen has been the opportunity to get in, and I think a lot of that has to go with what's happening with the yen carry trade, the dollar devaluing, and people really just looking now and saying, we're going to go back thousands of years and we're going to look at these things as the safe haven trade. And I don't know that I've ever seen it across the board like we are seeing right now. And you couple that with, the assets like silver, platinum, copper now, it's crazy. It's just crazy.
It's, we were thinking about maybe natty gas, like, are we just going to go down the list? All of them. It's like, if you're a commodity, wake up time.
Wow. I mean, natty gas is the one that scares me the most. I mean, we get out of this cold streak, this massive storm and everything that the country has had. And whether it's a week, 2 weeks, 3 weeks from now, if all of a sudden that outlook is for mild temps here, we're going to see natty gas down 50% easily from where it is right now.
That, to me, also stands as the most dangerous on the list.
Oh, brutal.
Because it moves already kind of wildly and erratically, whereas, the gold trade has got a couple of years of basis behind it. The silver, somewhere maybe in between the two, where obviously we saw silver yesterday can rip faces off in both directions in one day. I feel like that was a bit of a warning sign, Scotty, to people that, especially if you're in any kind of short-term option, then you need to be ready. Like, these are some serious waves you're surfing in for silver.
Oh, no doubt. And volatility is not going away anytime soon. So, anybody that wants to do something in the precious metals, you've got to expect that. You have got to expect that. So, like you said, it can be face ripping in either direction. Now, are they overbought? Yes. Does that mean it can't still go higher? No. So, this is a sustained rally like I don't ever remember. I mean, we're talking, obviously, gold is longer in the tooth than silver or platinum or any of the others, but this is just, really, it's unprecedented in my opinion.
It is, yeah. 270% on the year for SLV for 1 year, not the year, I should be clear, and 88% for GLD. The connection here to the dollar, I feel like, has to be talked about because as we're speaking, oh my goodness, I might have just gotten my face ripped intraday, Scott, because I was saying the dollar might hold, and it just broke down 96.
96 line in the sand, right? That is a line in the sand. And
apparently not anymore. It was 20 minutes ago.
The president just came out literally within the last 3-4 minutes and said, oh, the dollar's doing just fine. The dollar is not doing just fine. In fact, there's headlines now saying the dollar tumbles after he said he's not concerned with it. He better be concerned with it, as should be the whoever the new incoming Fed chair is. They better be concerned with this because, again, if we continue to see this yen carry trade, continue the way it's going here, look out.
Boy, great eyes on that, Scott. Some action into the closing bell. Really testing I'm literally banging out a tweet right now. Dollar just obliterated on Trump's comment about it.
Yep.
Not being a big deal. Here's the thing: is that I oftentimes say that political commentary, geopolitics, drama over Trump is oftentimes the most easy buy the dip signal. But the distinction, the difference, I agree. When the dollar's down and like we had yields up the other day, that's not good. That is telling you need to pay attention. And I said coming into this year, the biggest risk we talked about was just an irresponsible approach to the Fed of just yanking somebody out who's been doing a good job to plug in somebody who's going to slash rates. That sounds like a situation for the dollar to go down, in my opinion.
I was having some conversations earlier today, as many of us do, talking about that situation. And you know what? Fed rates don't need to come down right now. They don't. You got GDP running as hot as we have seen in a long, long time. Inflation is still at 3% or just about. Maybe the job market is, maybe getting a little bit softer, but boy, the pressure, to lower rates here, that is the worst thing that can happen, in my opinion.
I do agree. And that's, again, to say that years of this kind of dialogue about dollar being in trouble, I have time and again said it's overstated. I was hoping that it wouldn't get to this point. And for a long time it wasn't. The dollar, here's the thing, we have to keep some perspective, which is that when you zoom out on the chart, the 1 year chart, that support at 96 just shattered, which is not a good look. You zoom out further and we're on the lows. You zoom out even further and it's like, okay, we're back to where we were coming out of COVID. But the whole thing that was great about us coming out of COVID was the dollar ramped up because our economy took a big leapfrog. So I do not like to see the dollar break down here. I feel like it's some of this drama finally coming to a head in a real way where the market's like, hey, get it together, guy.
There's no question. And we are the strongest economy in the world. There is no question about that. And if GDP does continue on this path here, that is just the most major disconnect you could see.
Sure, yeah. So maybe there's a reversal trade short term if the prints come out good. Like if inflation comes out in the next 2 days contained, then I think you want to. It's tricky though. Maybe that's what we leave it on, Scott. What's the logic there? If inflation comes in below expectations, do you buy or sell the dollar?
The answer is yes. I think
it's tough.
I think for right now that any rally in the dollar has to be sold. It is a sell the rip, not a buy the dip in the dollar, which is complete opposite from precious metals.
Okay, I'm with you there based on trend, right? Just based on trend alone. That makes sense. The tricky thing about the logic for inflation is like, all right, if inflation comes in light, then Trump's going to say cut, which means dollar down. But then also if inflation comes in high, you could argue
he's still going to say cut.
Well, and you could argue too that just kind of that's when you get the real kind of debasement of the dollar happening. So maybe the dollar. So to your point, the dollar just looks like sell any rip right now.
Until there is some, I don't even want to say resolution, but until some of the volatility of what's going on in Japan and this carry trade calms down, the dollar is a sell any rally.
Yeah, I'm with you there. Well, the dollar has been, I guess it's got to go red on my risk radar. It's been yellow, and I think it's time to accept that this thing, it really shattered there in the last couple minutes.
You just blew through the red stoplight. You just got ticketed because it definitely has to be red.
No, you're right. I'm on board with that now. Major technical break. I think that's the story of the day basically as we head into the close. But we got 1 minute here, Scotty. You got a trade that's burning a hole in your pocket that you want to get out there or what?
I don't want to say I love it, but I really like getting long in Humana right now. Obviously, with the health insurers getting beaten up, and for good reason. If I look at Humana and I look at United Healthcare still has a lot to give back from a technical standpoint. Humana is down at some really, really big support, that 200 to 205 level in Humana. So that is one I am selling put spreads in Humana, going out a month, 2 months. I'm not that I'm saying that these things are going to rally back. I don't need them to rally back big time if I'm selling really expensive, real, big premium put spread. So that's my trade of the day.
Okay. Like the chart for a dip. I mean, it looks pretty good. Humana down there at pretty clear support. So why not take a stab just based on the technicals alone? Big red candle there. And as opposed to the dollar chart, which broke through support, Humana hasn't quite yet. So I like that. Dollar getting ripped apart. Red on the risk radar. Maybe Humana for a little BTD. Thank you, Scott. Nice work taking us right into the bell there. Appreciate it, sir.
Have a good one.
Thank you, Scott. Prosper Trading Academy. There's the bell, and we did get a little volatility into the close, no question about it. S&P 500 that was able to hold on at 69.78 and change. Big drop in the dollar. That'll be the story to pick up tomorrow. Have a great night.